Stacey, one of the things that I found interesting in your commentary is that as you look, while there is dispersion, if you look across the semiconductor market, they tend now to be trading at roughly their values over the 2015 to 2019 period. So is what's happening here just a correction or reversion to the mean because they got so far out of play, or something more worrisome than that?
Yeah, this is how semiconductor cycles play out, right? At the peak, what happens is that the stocks stop going up on good news and the multiples come down. And frankly, once we get to the trough, you'll see the opposite, where ideally the stocks will stop going down on bad news and the multiples will come up. But they tend to overshoot in both directions. And you're absolutely right. If you go back to the peak of the space, maybe in November, multiples back then were about 22 times forward earnings. You're about a 10% premium to the S&P at that point. We've come down now. We're about 16 times. We were a week or two ago, about 16 times price to forward earnings, something like a 15% discount, give or take, to the S&P. And it was kind of right back in line with pre-COVID averages. And so my take of that is that valuations have begun to normalize, although I don't think we've broadly seen panic yet. That's usually what would happen before we'd see total capitulation. I don't think we're there yet, but at least valuations have come down off the peak. We're kind of normal relative to history.
Are we close to panic in any individual names? I know you think that Qualcomm may be getting closer to that level. Is Nvidia there? And golly, maybe it was 16 months ago, if somebody had asked me, hey, what stock should I buy? If I was in the business of advising people, I might have said Nvidia.
I think if you'd bought Nvidia 16 months ago, you'd still be doing pretty well, even after the sell-off. But there are a few stocks where I think we have started to see some panic. And you mentioned Qualcomm. I think that's a good one. Anything that's been touching a smartphone recently has been death. Smartphones are one of the markets where you can actually see we've seen weakness. We've had weakness in China. And Qualcomm got caught up in that. Although they just had earnings last week, they seem to be powering through it without a problem. They're less exposed to some of the areas that are weak. They're also picking up some new sockets at like Samsung. But Qualcomm's back down to trading like 10 times earnings. It's actually cheaper today than it was, not that long ago when people thought large chunks of their business were going to zero when they were at war with Apple. It is much cheaper today than even it was then. So, yeah, there are some areas in the space where I think we are starting to see it. I get why. Like I said, the end market is out of favor right now. But those are some where I think there is opportunity.
Still, it's
and you mentioned Nvidia as well. That's another one. It's still relatively expensive, but it is much cheaper than it has been. And they are exposed for some of their end markets and some of the areas, data center and other things, where not only they should be okay in the near term, but the long-term trajectory on some of those markets, like data center for them, I think is phenomenal.
Yeah, Nvidia looks human at 33 times forward earnings. It's crazy.
Yeah, it's not that bad anymore, right?
Stacey,
it was 65 times earnings not that long ago.
Absolutely. So, quick question for you. You mentioned that anything that touches the iPhone cycle lately is death.
Not iPhones, smartphones. iPhones are okay.
Smartphones. So I guess my larger question to you, going back into last year, we thought that maybe it was going to be autos where we saw the biggest overhang problems from the pandemic. Has that not borne out? And now it's more the smartphone, non-iPhone segment that we're seeing this pandemic cliff? Can you just explain what's going on there?
You bet. So in autos, I'd say is one of the markets where investors are worried that there's a cliff coming. We haven't seen it yet. The reason investors are worried is there's still a very sizable discrepancy between, auto semiconductor shipments, which are, 30% plus above where they were pre-COVID, and automotive production, which is like 20% lower than it was pre-COVID. So there's a pretty sizable gap. And when you're looking for these kinds of parts in the market where you can actually see evidence of double ordering and overshipping, auto is one of those areas that draws concern. Although for now, the demand is still very strong. Like ON reported this morning, the demand in auto for semiconductors at least is still strong. We just don't know how sustainable it is.
All right. Stacey, thank you. As always, we appreciate it. Stacey Rasgon.